Welcome to the Swiss Association of Market Technicians, and we'll be having a follow-up interview with our guest, educator and investor, who will be discussing his investment process and a view on Apple and the S&P 500. So welcome back to the Swiss Association of Market Technicians show.
Nice to be here, Ron.
Great, and our main focus today will be on your investment process and view of the market. Specifically we'll be looking at Apple and the S&P 500.
Exactly.
But we're going to begin with Dow Theory. How does this feed through to your investment process?
Okay, let's go to Dow Theory. So Dow Theory is largely used by investors and traders to make their decisions. So Dow Theory is basically identify long-term, intermediate-term, and short-term trends, any stock price or any market price, and as you can see in the chart.
Wonderful. And looking at the Apple stock, which is a one that so many people around the world love, what's your technical view on this very important stock?
Okay, if you apply the Dow Theory right now on the Apple has been trading in a bullish channel in past years, and we can see right now a change in market sentiment.
Now, just before that change, we've had the biggest drop in 10 years on Apple, and so many people who would have fallen in love with Apple and maybe got blinded by that love. What is your advice in terms of the timing perspective?
I think the technical analysis gives to us an opportunity and an advice in not get married to a stock. So some stocks, they are considered to be a good opportunity until they are not anymore. So the fundamental analysis is a little bit lagged about this decision because information from financial statements come every quarter. Technical analysis can give to us, as you see this in the chart immediately, what's going on when the price start breaking some interesting levels of price, and investor could go back to the stock later on when the stock will be more interesting.
And what does your technical analysis say right here and now about Apple?
So what it's saying here is that the Apple broke down the 200 moving average and broke down the uptrend channel with the price going below 185. So now you see the price is in another area, and this area is bringing a different sentiment of the market compared to related to Apple.
Okay, and a potential buying opportunity if it breaks back above that average?
Exactly. So technical analysis can bring. So this is not a definitive situation. So if Apple comes back above 190, that could be another good opportunity for investors to come back to Apple again and probably to benefit from another leg of this bullish trend.
Now, I know relative performance is also a key part of your process, and of course the portfolio manager is looking to increase alpha and beat the benchmark. How would you feed relative performance to this move on Apple?
So we in technical analysis, we can apply the relative strength of a stock compared to the benchmark. In this case, most of portfolio managers use the S&P 500 index as a benchmark to generate alpha. So we can see here that when Apple is outperforming the market relative to the S&P, when Apple becomes not performing anymore the market. So we can use this information in complementarity to the other from fundamental to make our decisions.
It gives another dimension.
Absolutely.
To the market move, but also maybe a lead signal sometimes.
Exactly. Let's see, talking about the leading signals, we saw that the crossovers of a 50-day 200 moving average, they can be used to make a long-term decisions. So we saw that before the financial crisis of 2008, we have what's called the death cross, when the 50-day moving average of price of the S&P became less important than the 200 moving average. You see that when you look at this information, we can understand that the market is losing steam in terms of momentum. And we see here down at the middle of 2009 another signal when the 200 moving average, when the 50-day moving average goes above the 200-day moving average, showing another opportunity for trades to come back to the market again. We call this the golden cross.
So a positive and negative signal using moving averages on the long-term and medium-term side. What does your analysis suggest for the S&P 500 now?
Look, what we are seeing with the S&P 500 right now is information of a double bottom pattern. So this pattern has been formed in the past 3 or 4 years with good results for traders who understand this pattern, of course. So we can see that this W pattern formation may indicate, I always say may indicate, an opportunity for entering a trading with a 4 to 7% of reward. And if this pattern is not confirmed, we can use a different level of price at 2,625 as a stop loss when enter position at the current price levels.
And how key is the risk-reward analogy and discipline to your investing and the students that you teach?
So what I teach to my students are what I use in my portfolio. So I believe that the technical analysis can give to us a complementary information, an additional tool to make my decisions and avoid the big losses when the market change of sentiment.
So right now, looking at this trade setup, we're looking like the probabilities suggest a move back to the old highs around 29.60, but the cutoff level is at 26.25, a risk level if the trade goes the other way.
Absolutely. So we, with the technical analysis, we use technical analysis to try to anticipate the next move, but we are never 100% sure that is going to happen. That's the reason why it's important to understand at which level of price I don't want to be anymore in this position.
Thank you very much, Fabio, for your time.
You're welcome.